In this example, we're going to look at a fund transaction for an endowment account. So in this case, we have a the City of Fountains received $1.5 million to create and maintain a large fountain in front of City Hall in honor of Ponce de Leon. So the city created an endowment account to account for this. It requires the city to invest in and conserve the principal amount. So whenever we have an endowment, what that means is that the principal amount of the contribution can never be spent, and only the earnings on the principal are what can be spent. So we have these different transactions for the year that we're going to be recording. So the first one we have is the day that we received the contribution and established the endowment. So transaction 1, we receive cash, and then we have revenue for the endowment. So we have a contribution to endowment is our credit. Okay, so we received $1.5 million. We won't need that much space, but just put it in there. Okay, so for transactions 2 then, then we purchased a certificate of deposit for $1 million, and then we purchased bonds having a face value of $400,000, and we bought them at a premium for $406,300, and we receive interest. So 2, we're looking at the purchase of the bonds and the investment CD. So we have investment in bonds and our certificate of deposit. And then we used cash of $1,406,300. Okay, then on June 30th, we received interest from that deposit and the bonds. So we received cash, and that cash is revenues, investment earnings, the CD, and revenues, investment earnings, bonds. So endowments can invest in anything they want. They can invest in stock, they can invest in bonds. Some of them will choose things like CDs or bonds, which are a little bit safer than the stock market. Some of them will do a mixture of high risk, medium risk, and low risk. It really kind of depends on. One of the things is that you want a steady, consistent return on earnings or on investment, because you can only spend anything that you earn. Okay, so we had our cash is $37,000. Then the revenues from the CD were $25,000 or 5%, and our bonds pay $12,000. So we had $400,000 in bonds at 6% for half a year. So this is half a year. Okay, so then the next transaction, we transferred the earnings to the maintenance fund. So now the maintenance fund can spend money on maintenance. So we have other financing uses, interfund transfer, and we paid cash. So that full $37,000. And then on the 5th, we have a change in the fair market value of the bonds. So our investment in bonds increased because the fair market value increased. So we prepared the journal entries for the fund to record the transactions above, and now we're going to look at the adjusting and closing entries. So there are no adjusting entries required, but we're going to have our closing entries. So where we close our revenue and expense accounts. So we have revenues, and we had 3 different kinds of revenues. So we have the contribution, change in fair value, yeah, I'm not fixing that, and investment earnings. Okay. So we're just going to debit all those accounts to close them at the end of the year. That's 12,000 and not 12. And then we're going to credit other financing uses, interfund transfer. And then we have our fund balance, unspendable, one more 0 here. Okay, and then the last thing in this example that we're going to do is prepare the financial statements for this endowment fund. So we have our assets, we have cash available of $93,700. So that's the unspent balance. Okay, and then we have the 2 investments. So we invested in bonds that have a current value of $409,600, and we bought a $1 million CD. And adding them together, we have total assets of $1,503,000, which is then also the non-spendable principal of our endowment. So our balance sheet balances. Then next we look at the revenues, expenditures, and changes. So we received the contribution of $1.5 million. And then we received interest on bonds and interest on our certificate of deposit. So we have the revenue earned for transfer was $37,000. And then we had the additional $3,300,000 from that change in fair value of our bonds. So we add up our revenues, and we have total revenue of $1,540,300. We transferred $37,000 out to the operating fund. So we're going to take our revenues minus that $37,000. We had a fund balance of 0 on July 1st. We received the contribution on December 31st. And so we have our fund balances as of June 30th. So that's some of the different transactions for an endowment fund. Of course, we're going to talk about endowment funds a lot more, especially when we get to the college and university chapters and the nonprofit chapters, because a lot of funding that they receive in contributions ends up in restricted endowment funds.